of all, please, can you confirm that you can see me on camera and that you can hear me? The sound should be good, should be perfect. Microphone is over here on my collar, looks good over here, so just making sure that you should all be able to hear me. There we go. Thank you very much. So I've got two screens and I've put this over to the right hand side, so if you see me looking off camera, that's what I'm doing. And I'm going to share my desktop with you, so let's go and have a look at this so you can see everything that I'm looking at. There we go. Now, the one more thing that I want to do is just pop open the chat. So I have the chat here so I can answer any questions that you might have and just see that everybody is happy. And I would love, by the way, for this to be as interactive as possible. My name is Adam. I am based in the United Kingdom. My name is Adam Harris, and I'm going to tell you a little bit about myself as we kick off, as we go through things. And I would love for this to be as interactive as possible. So please don't be shy. If you have a question, just put it into, you can message me directly or you can put it in the group chat. Doesn't really matter if you have a question, and just do it as we go. All right. You don't have to wait until the end. You can save it till the end if you like, but you don't have to. Okay. So I'm speaking to you again. My name is Adam. I'm speaking to you today from London in the United Kingdom, and the weather this year has been, we've had the most rainy summer I can ever recall. It's not that the weather's always great, but we usually at least have, a couple of months of really good days in summer. We haven't had that this year. Okay, so, but I see the whole world is a bit on fire at the moment. Weather's all over the place. So I should be grateful that we are not, we're not on fire. We don't have those kinds of issues right now. So here's the thing. There's a couple of core topics that I would like to cover. We're going to run for approximately 40 minutes. I don't want to run for too long. I don't want to waste your time. I want to brain dump as much experience and wisdom as I can in the limited time, plus apply it to the markets in real time. So we're going to talk first of all about what is the different types of trading style that suits you. Day trading, end of day trading, meaning are you trading the 5 minute, the 15 minutes, are you trading the 4 hourly, the daily? We have all these choices. You can do more than one, right? My particular trading style, if anyone is interested, I'm a day trader. So I trade with the trend. I trade the 1 minute, the 5 minute, the 15 minutes. I usually look for the 4 hour to give me a sense of direction. I'm going to show you a bit of that. Then at the end of day, so I might trade we'll look also at the sessions. I'll show you what times I trade for that. And then at the end of the day, I'll also look on the daily charts to see if there are any setups on the daily charts. Now, sometimes I do this because I have a busy day and I have non-trading commitments. So I can't day trade. I can't afford to. I don't have the ability to do it. Good afternoon. So I don't have, unfortunately, there are days when I've got to take the dogs to the vet or go shopping or do things and I'm not able to sit at my desk, or I have a call or I have to go to the bank just like everyone else does. And I can't do it. But then usually by the end of the day, which is in the evening for me, I can do a scan. And so I tend to do both. And at least it means that if I miss the day trading window for the day, I can still do the end of day setups. I trade all markets. I focus on where the trends are. That's really the driving, qualifying factor for me personally. So what I would love for you to get out of today's session is clarity. Try to see the markets through a master trader's eyes and get a sense of why the markets are likely to do the moves. And we'll do that. Okay. And just a couple of things to think about. Do you prefer particular types of market conditions? And if you're using one of the strategies with Actions to Wealth, what types of market conditions benefit or are the best for that strategy? All right. So those are the things, because we can pick and choose which markets are the ones we want to engage in. Cool. So let's start off with, excuse me, I'm on the tail end of a chest infection, but I'm better now, but my throat's a bit tickly. So let's quickly, and I'm also going to introduce a couple of tips here called the 6 candle rule. So if you're a day trader, if you're trading below the daily time frame, you're going to find this quite useful. And we're going to do some higher time frame analysis on these. Okay, so very quickly, let's kind of talk about what type of market conditions we prefer, right? So that I can go to the charts and I can show you this. Just changing the color of my pencil. There we go. So basically, any market, any time frame can only exist in one of two states. That's it. It is either not trending or it's trending. It's either trending up or it's trending down. That's it. It can only be one of these two. And it doesn't matter whether it's gold or whether it's euro dollar or whether it's the 1 minute or the 1 hour or the 4 hour. It has to be one of these. Now, generally speaking, there are three different ways to engage in the markets. In a range, this is the number 2 best way to kind of generally engage in the markets. We can sell at the top, trade down to the bottom. We can have our stop loss outside the range here, take our profit just inside the range. And we can get some really good reward to risk setups that way as well. And it's a sensible thing. We can identify the types of conditions. We know why we're trading it one way and why we're trading it another way. And it can have potential good or decent reward to risk. It can be a little bit annoying because ranges do not include all the traders that are out there, meaning that the volumes can be a little bit lower and the market often is either resting or doesn't really know where to go. It could be resting. It could have had a very, very big move. Stocks are particularly good at this, or their indices. They can be trending, and then they don't want to have a correction. They want to just basically tread water until they've had a bit of a rest, and then they carry on. Okay, so we get bear flags, bull flags, pennants. We get all kinds of things that happen when the market doesn't really want to do a big correction. It just wants to stay where it is. So we get range bound stuff as well. Now, there is a bit of a misnomer that ranges are, in other words, that the market spends more time ranging than it does trending. When it comes to the indices, that's false. That's not true. The indices tend to trend more than they range, and they tend to trend up more than they range. So if you're looking at the S&P 500, if you're looking at the DAX, if you're looking at the Dow, they tend to go up more than they go sideways. The FTSE in the UK, not so much, tends to range quite a bit. But that's a valid way of doing it. The third way of trading the markets, which is, in my personal biased opinion, but based on experience, is to trade what's called reversion to the mean. So this is when we have a trend, for example, we decide we want to trade price as it has a correction back to some type of point that we consider the mean or the average of price. We tend to sell, put our stop loss up here. Often, the frustrating part about this is that we can risk 1% to make 0.5%. So it's an inverse reward to risk setup. And it's high risk because we're trading against the flow of price, and the market might not do that. So this approach often has a large number of losers, and the winners don't really make a lot of money. And it's incredibly stressful because people will be asking us, wow, have you seen the NASDAQ moves today? And you'll be like, yeah, I was selling it. I was going the other way. And you feel a bit like an idiot. So it always on paper, in theory, sounds like a really, really good thing to do. But the data tends not to support it. The data tends to show this is not really the best, most happy way to trade. It's not very satisfying, and it doesn't necessarily, it's higher risk, and it doesn't necessarily generate as higher rewards. If there's a strategy that employs this approach, it really has to demonstrate that it's reliable and trustworthy. And then the best way that we do have, number one best way to go, the champion, is to trade with the trend, in the direction of the trend. And ideally, then we just have to focus on where can we get in. So there's really 2 ways that we can get into a trend. I'll show you in a moment. I just want to finish talking about this. The beauty of this is we're trading with the flow of price. The reward to risk is greater. It's fantastic. It's 3-to-1, 4-to-1, 5-to-1 or greater. It's beautiful. And we feel like we are part of the moves that are happening. So we have fewer trader regrets. So we're going to take all of this and apply it to the live markets in real time. Okay. Now there are 2 ways. So let me just remove this. There are 2 ways really of getting into a market. Only 2 ways. It's pretty cool. When you have a trend like this, you can either get in on a pullback. So when the market is pulling back, it's retracing. You can choose or turning around. There's somewhere in this area where you could be looking for a pullback. So as soon as the market starts to retrace, so think about it like this. If you're Warren Buffett, one of the best time to buy blue chip stocks, let's say Microsoft or Costco or any of the big brands that you really like, one of the best times to do it is when there's a bit of a market crash, or when you have a big correction in the market, because there's the drop in price. And because you've been around for a while, you're an experienced investor, you know that in the long run, the best companies are going to survive and they're going to recover. So you don't see those market crashes as a problem. You see them as a buying opportunity. If you invest in properties, the best time to buy properties is when there's a property crash. It's fantastic. So the best thing you want to do is be as liquid as possible, already impossible, and you want to make sure that you don't buy. So when you're looking at a move, the worst possible time to get into a market is in the second half of the move, which is usually this part here, the second half of the move. Now, the problem is we don't always know how long that move is going to be. We don't know. You could have a section here where you have a move like this, and then a move like this, and then your next move does that. And no trader knows necessarily. I mean, there's followers of, say, Wyckoff theory and wave theory, and they often believe they can predict which wave is going to be the longest, but you can't always do that. So don't feel frustrated if the move goes further than you anticipated and you didn't get all the profit. Every trader, if they can average getting 50 to 80% of the average move, because remember, this is a repeatable exercise. We do this on a daily basis because we're looking to earn a secondary or primary source of income. So it's a repeatable action. You go out there, you're going fishing, you throw your line into the markets, you catch a small fish or 3 small fish or 1 big fish or a big fish and a small fish. Your goal is to be consistent with everything that you do so that you, on average, you are net profitable. We want to respect and cherish and manage each trade as though it has the potential to give us great returns, but also we don't want to obsess about it. Once that trade is done, we review it to see if there was anything we could have done better, and then we move on to the next trade because we know that it's a numbers game. It's consistency. All right, so here's the thing. We can't predict that, but if we can get an average of 50 to 80% of the move, of the average move, we are golden. So the worst time to get into a move is in the second half of it, when it's overextended, and that's a problem. The best time is the opposite of that. So when the market starts to have a correction anywhere around here, and the very, very last point you can get in legitimately, that professional investors and traders are happy with, the very last point, line in the sand, where you can get in is when price just breaks the previous high and goes to an all-time high. So a lot of investors like to do this with the S&P or the NASDAQ. As soon as you break to an all-time high or a new high, that's where they like to get in. So that's the last place you can get in. You don't want to get in here. So you don't really want to get in on the second half of this, and you don't really want to get in after that point, because then you're getting in too late. So basically your sweet spot is as the market starts to retrace, and the very last place you can get is once it breaks to a new high. And if you really can, you can get in on the turning point. So this is a very nice place for us to be able to identify generally anywhere in that area. So what I'd like you to take away from what I've just shown you is that there are multiple areas where it is acceptable for us to join a moving market, to get in before the move happens. All right, lots of places, but there's a certain point beyond which it's now not worth our while, statistically. And I'm telling you this because I taught someone very briefly. I took over temporarily from someone else who was mentoring them. I mentored them for a bit, and then I handed it. Now, this individual worked under high stress conditions. They were an emergency helicopter rescue pilot. So what they would do specifically was if there was a car accident, they would land there, take the injured person to hospital. They would fly them, and it's very stressful. Or it might not shooting or some violent crime or something crazy. And that was their job. So land in a crazy area, pick people up and take them out. So this individual have been able to cope under stresses, but we often have minds. So we think, oh, well, I'm good at this, but I can't do this. And I think this individual, I think he didn't think of himself as a money. So he behaved differently when it came to money. He was nervous when it came to money, wasn't nervous when it came to blood and danger. Here's the thing, he consistently would get in here. Even though when I said to him, explain the logic, explain what you should be doing, he would explain. He knew what he needed to do, but he couldn't help himself. He kept getting in on the second half here. And ultimately, he just couldn't change that. Couldn't change his own behavior and his own psychology. And he was very stressed and very unhappy. Now, that's rare. That's rare. I think I know maybe 2 people have said, I don't really enjoy doing this. 2 people out of thousands. Most people just make the changes and learn to adapt, and they're fine. So it's not meant to be a warning at all. It's just meant to tell you that, it's the choice is ours. So these are really kind of the last thing. This is a learnable skill. It's such a conceptually simple idea, but and we just have to master it, and we do that through practice. You can learn to do anything. We're incredible. We have that ability to do this. Okay, so do we have a preferred asset class? There are some differences. Forex tends to range a lot. It can. Commodities, also the same kind of thing. They can trend and range, and then indices tend to trend a lot, range less. And so we just need to be aware of those. So we're going to go to the markets and have a look at that, and then we're going to talk about how we go from the weekly to which charts I would look at. How do I create a watch list? And I'm going to do this in real time. I'm doing my analysis, my weekly analysis, I'm going to do with you for this coming week. How do we do that? Translate that down to the lower time frames. So for those of you who don't know, for example, this is again my personal experience and opinion. By looking at the 4-hourly chart, if the 4-hourly chart is trending really well, I'm going to look for an entry on the 15-minute. So that's it, 4-hour chart, 15-minute. Now, occasionally I might go down to the 5-minute or the 1-minute, but it's always in line with what I saw on the 15-minute. So the two most important time frames for a day trader. And then for almost everything else, it's going to be the daily and the weekly. Now, question that's just come through. 1, how do you tell if the retracement has ended? That's a great question. And I'm going to use an actual live trade or open trade for real that I spoke about last week, euro yen. And then 2, what would you do for very deep retracements to 78%? That's a great point, because it's not on the platform, but Tesla did a really, really deep retracement, as an example, on its monthly time frame, went all the way down, really went very deep, and it recovered. And that's a really good question. Now, again, I'm going to answer number 2 first, because it's straightforward for me. It's a straightforward question. For me, personally, I believe that once the market has retraced further than 618, further than the 618, at that point, I'm not convinced that the trend going forwards will be as strong. And therefore, I hesitate to engage in that. In my experience, once it goes beyond that 618 retracement or further than that, it has lost its strength. Back to the 618 and beyond, or where it can resume from that, to me, still do that. But beyond that, then I don't consider it the best quality trend. So that is my personal opinion on that, based on experience and on the experience of people that I work with and trained under as well. Okay, and so super cautious of that. Right. Okay, and then how do you tell if a retracement has ended? So let's quickly do that, and then let's go through to the charts. My goal was to run for about 40 minutes today, so we've got, let's call it 23 minutes left, and that's enough time for me to be able to do this. So let's go and let's have a look at that. So I'm on the mouse, good. Just checking I have everything the right way. So why do I like the yen charts? Let me show you the analysis here. And this is gonna do the yen pairs in general for the week ahead and answer the question that you've asked me. So first of all, let's look at dollar yen. So if I look at the dollar yen monthly, now remember what we're trying to do is I know you saw me right there on the list, the 6 candle rule. Let's put that aside for the moment. Let's just look at the last 10 to 60 candles. But what we want to do is we want to look at the most recent swing lows and swing highs. So this is definitely, when you look at the overall moves here, these are the really big swinging components. Then we're down here, then it gets very messy. Then you kind of got that, and you got that, and you got that, and you got that, and you've got this bit of mess over here. It's a bit messy, but these are the obvious ones. These are the big ones we can see. So is there a trend here? Are we currently in a trend? And the answer is yes. We're currently in trend. And is it strong? Is it strong? Is it bullish? Is it bearish? Yes, it's strong. And let me explain why it's strong. The angle, the color. The angle of a trend matters. So if a trend is going at a perfectly sustainable 45 degrees, that's great. Beautiful. It's a nice, steady, strong trend. As soon as it drops below that, if it goes this way, what have you got? What have you got, guys? If a market's going this way, have you got a trend or what have you got? Thank you. Perfect. Everyone's like, range. So you've got a range, which has no trend. And then if you go like this, what happens if it does this? What have you got? Well, there's an expression, just because you might not know what I want to know, but parabolic. So when a market's going straight up like this, you tend to end up with a bubble. So that's when it's going straight up. This is when you've got a really good trend. This is when you've got a range. And so somewhere in this area here, somewhere from about here to about here, anywhere in that, you tend to have, it's not moving so fast that you can't get in, and it's normally nice and sustainable. It'll last a bit longer. When it goes like this is very interesting. When the market goes parabolic, so when the market just goes tick along, and then it just does that, it almost always, if you draw a line going where it was originally going to go, it almost always comes back down to there and then recovers and goes on. So I suppose, in answer to your other question, I suppose when you have a big and it's bigger than 618, that's fine. But what I do is I consider the overall trend done, and then I wait for a new trend to kick off, because it might go sideways for a bit and then it starts up again. And that can happen with indices. They can have that kind of correction. But this is often what happens when it goes parabolic. So anyway, in this area can be a very nice angle of momentum. So when I look at where we are now, and of course, whether you squash or stretch your chart, you change the angle a bit, but you learn to get a sense of it. Here you can see that the angle is pretty strong and bullish. When we look at it here, this angle is a little bit different from this one. This one is almost straight up. It's a little bit different. It's good. When you look below it, you can see a lot of wicks. So I'm not just, it's a bit of a wax on, wax off. If I grew up with a Karate Kid, bit of a wax on, wax off moment right now. I'm showing you stuff that is a lot of, I'm giving you price action training here, but and you'll remember it, but you might not realize it. Okay. So all the wicks, a lot of wicks underneath here. What does that tell me? It tells me that this is certainly more bullish than bearish. In addition to that, by the way, the candles tend to be closing quite near the highs. So there's, look, that's a bit of a wick. But even here, for example, they're generally pushing near the highs, smaller wicks. A lot of that means with the wicks underneath and closing quite near the highs with not really big wicks on top, the candles are quite bullish. They're closing, they're moving generally higher. When you start to get a lot of wicks at the top, then you're getting exhaustion and you get indecision as well. So when you get, especially when you get wicks on top and wicks below, you've got indecision. The market doesn't know what to do. Okay, so what do we know about this? It's bullish, looks pretty good. Here's the previous highs up here. We've got a really nice swing low here. So the probabilities of it going at least are good. They're good. They're not, nothing's guaranteed, but that's what it tells me. That's what it's signaling it wants to do. So let's go to the other yen pairs. So let's compare this. Let's go to, I'm going to do all the others and I'll come back to, and then I'll come back to euro yen, pound yen. Definitely bullish, super bullish. And you might be saying, well, listen, I day trade the 15 minutes or the 5 minutes. Why do I care what's going on the monthly? Well, everything adds to the story. First thing we've seen here is I brought up, both are bullish on the monthly. So probably that means they're going up on the daily. All right, we'll get to that. We're going to go to euro yen and go through it, but probably means that. What about Aussie yen? So Aussie yen is not as bullish. It's it's trending higher. Let's do this. Let's change this color here as well, something that stands out a bit more. It's kind of got a general line. I would say it's going higher, but there's something different here. Something different here. This and this. And if I had to draw a support resistance level here, it kind of sits about there. I could do another one and move it down here as well. Could do that. But somewhere in this area, there's a problem. So what does that tell me? Well, nothing yet, just yet. I'm going to hold on that. I'm going to come back to it. Let's look at Kiwi yen. So what we're doing is running through the charts. We're just observing things for this time. We're just observing stuff. Where's my Kiwi yen? Did I do it up here? Okay. I don't think I've added it. And we can do a few of these others as well, by the way. Check a couple of the others. Euros thing, we've got a few of those. Okay. So, Kiwi yen. Okay, so Kiwi yen, and that's a daily. What does the monthly look like? So the monthly is very similar to It's struggling. All right, wicks below, wicks above. Market doesn't really know where it's going. Tries to break out, stalling a bit. Okay, that's fine. It was trending here. This was trending here. Cool, we'll come back to those. The reason I say we'll come back to those is because it'll make sense in a moment. So there we go, have a look at the rest. Let's kind of move on. So let's look at CAD Yen monthly. CAD Yen monthly, also quite bullish. Okay, it's coming into a bit of a level here, that's fine. Let's look at Swiss Yen monthly. That's going. In fact, this is almost going parabolic. It's almost going parabolic. An angle there, then a different angle here, and then a sort of angle like that. So it's going a little bit parabolic. So when it does have a correction, when it has it down the line, 3 months from now, 6 months from now, it's going to be a big one. We'll see it. We'll see it happen. It takes a while. You have to get one monthly red candle, and then you have to break the low. So it takes a couple of months. All right. So they're nice and bullish. This is what I like. So to me, Swiss Yen immediately fulfills criteria. So does Euro Yen. Well, let's go and have a look at Euro Yen as well. Okay. And let's add that to my list. That's also bullish. It's also looking nice and bullish. So we can see that all the yen pairs are moving higher. So Kiwi Yen, generally speaking, we can see that they're bullish, they're trending higher. So what does that tell me? Well, it can go onto my list to look for buying opportunities. Obviously, I don't want to get overextended. I don't want to get too exposed, but I want to make sure I can access those. Okay, thanks. Thank you for that, by the way. That was a little tip that I wasn't aware of, that you could do something like this. No, it doesn't change. It doesn't do it for me. But anyway, it's fine. No problem. So we get a nice little bullish move to the upside. I quite like this. So now I'm going to go down to the weekly. And the weekly, you can see, has just had a bit of a tap here. Now, I've taken moving averages out. We'll get to that in a moment. I've taken resistance levels out because we'll get to those. You've got little levels like this. We've got a couple of other things. We've just broken outside of a little consolidation here. A little bit of a kind of sideways move. We kind of got in here, we stuck in here, we've broken out so far, closed outside the range. So this is where the close of a market can be significant. Candles moved up and closed outside of this range. Does that mean we have definitely safely escaped this little consolidation? No, but probably. 8 out of 10 situations, we're probably free and clear. When you look at all the other yen pairs that are moving higher, it implies we're probably, the momentum for the yen pairs is to the upside. So we're probably okay. So then what I do, so remember, I'm going to take this down to a 15-minute setup that I've been looking at. So I was looking for a breakout. Now remember, we had 2 different ways we could essentially get out of a section. We could get out on a breakout, we could get out on a pullback, but this wasn't really an obvious kind of a pullback. There was a bit of a pullback, there was a bit of a pullback, a whole lot of different things here. And I'm going to go to the moving averages in a moment. I'll give you an example as to how we can tell where the market has likely finished its retracement. But it's also part of this. This is a real trade, and we'll see how this goes. So we have this, and it still sits on my watch list. It's still valid, and it's still valid. Now, the other pairs are also quite nice and valid. So we've got about 12 minutes left. I want to spend a couple of minutes on this, and then I want to run through all of the charts as well. Can I get some feedback from you guys? Is this helpful to you? Or do you feel that you want me to just move on to other stuff? Just so I know, because if you like this, then I'm okay, good. So here's thinking. I can get in on a breakout, or so I can get in. So I want to separate. Where do we think from what is the trade idea? Because when we can identify where the market is going, then the next part becomes, okay, we think it's bullish, we think it's bearish. Now we need our entry, we need to know where to put our stop loss, we need to know where to take profit. So there's a logic, there's a rational idea behind it. You're a happy place, okay? Once you do that, you'll see that the market will communicate to you a lot about where it wants to go. Doesn't mean it always succeeds, but it can tell you, look, I really want to go this way. And then you start to see it as something that you have there's only 2 or 3 things that can happen. And once you start to see that, you start to realize that most of the time you can predict which way it's going to respond most of the time. And that's where you understand why you're managing a risk, because you know that it's probably going to go your way, but it's not guaranteed. And so I want to get you to a place where you're confident that at least you're reading the market's intentions correctly, and you still understand that it might fail to do that. Okay, so I could get in on the breakout. I spoke to you about that. But the other idea is maybe it comes on a pullback and I can get in. So if it comes back on a pullback, that's very cool because I can get in here, put my stop loss there, stop loss there, stop loss there. Now, you're saying to me, well, where should I put my stop loss? Which one of those is right? Every single one of these is a valid stop loss. I can put it there, I can put it there. They're all valid, but each one has consequences. The further away my stop loss, the further away my take profits. They move out because it's 1-to-1 or 2-to-1, they move out. So ideally, and this is what a master trader, experienced trader's goal is. Your goal over time, when you know your strategy and you're comfortable with it and you build up experience, your goal is always to bring your stop loss as close as you reasonably can without exposing it to getting hit. Okay. So here we go. So I would say for me, the stop loss is either there or there. Now I know what happens. People have a couple of losing trades and then they panic. They're like, I'm just going to put my stop loss here because I don't. But I want you to understand that each of these, you must understand that there can be different places to put your stop loss. And the only way you know the best place to put it is through data. You need to have 10, 20, 30 trades, the same idea, to know which way they respond. So there we go. And I'm looking for a pullback and a takeoff. So now you understand my logic. It's broken out. The weekly candle's broken. Are we going to get a pullback? So now we're going to go down to the lower time frame. So we go down 4 hourly, and you can see it started to turn back. Starting to turn back. Good area. Now I must add this in. This is a currency thing. With currencies, I often see the market doesn't respect resistance levels. There might be an obvious one here with like 5 touches and it comes through and it comes back down to the previous one. So with currencies, I always allow it to fall through that level. I always want to make sure that even though this should be the definite line in the sand, that I'm not surprised if it does come back a little bit deeper. But again, my limit would be 618. And so this is what I think you'd appreciate. Okay. So here I'm going to take my Fibonacci measurement there, for example, and you can see it's coming back to the 23. That's okay. It could rebound from here. It could the 382. But what I like about this is the 50 fib and the 618 land on support resistance levels. Now, what does that mean? It actually means that fib traders, support resistance traders, probably pivot traders overlap. Their orders are going to overlap. And so there's just more orders sitting in these areas, which means that if I took this trade 100 times, 100 times over and over again, that the majority of times price would be drawn to these two levels. So the question was, how do you tell if the retracement's ended? Because this is an annoying thing. The market could turn from here. It could come back to 382, could come back to 50 or 618. For me, I think the probabilities are good so far that it'll be attracted down to these levels. I think they're good. Not guaranteed, but I think they're good. And so what do I look for? What do I expect to be the turning point? So there's a couple of things traders can use. They can use trend lines. Some traders like to use trend lines. So they will go and put in a trend line here, maybe put in a trend line here. Trend lines can be frustrating because they can be subjective and you can have 5 of them and you don't know which one is which one. So remember that our core idea is that the market is. Now, this is very important. This is one of the biggest bits of Big Brother advice I can give you. The market can come down and it can do things. It can do this, pull back. It can do this, pull back and hit here and then go. This is one of the most powerful things that happens. You get a double bottom in an uptrend and you think it's failed because it does this and it starts coming back down and you think, oh no, my stop loss is here, and actually it double bottoms. And then I want you to remember this. I want you to remember that the market can retrace, come down, start going up. Now you're like, oh no, it's a higher low. And then it goes again. And those are big moves. So I want you to be prepared that for something like that as a possibility. It happens. It doesn't invalidate the trend. It's still good. Okay. So the market could come down to here. I think it's more likely to come down to here and go off there. And it could come down to here potentially and go off there. I think those are likely. Is anything else possible? Yeah, it could just fall through here. Of course it can. But these are the two different places where I'm looking to see if price is going to turn around. And what am I looking for? I'm looking for signs that the buyers are coming back into the market. I'm looking for green, bullish candles. I could get a double bottom. A double bottom, ladies and gentlemen, is the sexiest. I like double bottoms, I cannot lie. It is one of the sexiest things ever. Your second candle would be very bullish, could be an engulfing green candle. It'll be a clear sign that that level, boom, is a double bottom. You get that kind of thing happening. Or a second one down here. That's the kind of, that if it fails to turn around exactly on the spot. Otherwise, I would look for a very strong green candle. If it lands support resistance level and it lands on a fib level and it lands on a trend line or it lands on the moving averages, and if it lands on combination of those, then that is a signal that the buyers have started returning, and this is where it is going to try to turn around from. Okay, so that's what I'm looking for. You go down to the 1 hour, the 15 minutes, you can kind of see what I'm looking at here. So I'm just going to zoom out quickly. So you can see I'm looking for price to kind of come back into these areas and looking for that to turn around in. We had a bit of a consolidation in this area. So if I just quickly highlight this, we had a bit of a consolidation there. Are at the moment, price is sort of reluctantly dripping down. Does it look very bearish? Because if it's very bearish, it would be trending more aggressively. It's reluctant. There's a lot of buyers that are keen to keep it going. The question is, are there enough buyers to turn around? So, so I'm looking at the 1 hour and the 4 hour for now. I'm really looking at those clues as to whether it's turning around. Now, failing that, let's say it starts, excuse me, the 1 hour starts going into an uptrend again. And that is probably, it has turned around and it's going back up. So that 1 hour going into an uptrend again is probably a clue to me that if it starts breaking above, here's a bit of a support resistance level. If it starts breaking above that, coming back and testing it here, bullish candles here and going off, then I can start getting in on a break above that high or on the very next pullback, and I can get that. And again, one more thing, I want to make sure that I've got some sense of where the next major level is. And I can take this, I can apply what we've just done to all the other yen pairs that I've done. Now, I need to go on and have a look at some of the other charts. You'll see in this one, for example, I've used moving averages. 50, 20, and 10. Simple moving averages. You can use exponential, but 50, 20, and 10. And I've got the MACD for momentum. And this is a good area. Here you can see, think of the as a train station. Think of them as a train station together. So that's where price comes back. This is the train coming back into this area, and then it heads out. This one, I kind of went past it, but then it sort of set up here and went. It's in that area again now. So these areas, when they overlap here, you can see the train goes away, comes back to the station, produces a setup, heads away, comes back, heads out, comes back. So it doesn't matter if it's strictly speaking the 10 or the 20, it's this area where I'll be looking for setups, and especially if they land on support pivot levels and so on. So I could take that logic, for example, and apply it to the euro yen and apply it to this. So this is a good area for it to kind of turn around in. And I love that because I want you to think of that as an organic trend line. It's better, I think, if it lands on a fib level as well, or on a pivot level. I love pivot levels. These are very reliable. They've when they were introduced in the 70s and 80s in traders in the pits, those billion-dollar funds. So they still train their people and their staff to use those kinds of tools. So they carry a lot of weight. Now, ladies and gentlemen, let's look at this quickly, very quickly. Euro dollar is trending higher. It's currently retracing into this area. This week is a bit tricky. Here over the next week, then the implication is it's going to carry on the week after. So this week is actually about euro dollar either hitting, which means that this area is going to be somewhat volatile. We go down to the daily, and it's a terrible. I haven't got much time left, and I want to run through the big majors. I want to talk about this. Let's go through a darker one. So here's a darker spot. And so this area is very choppy. So if you're day trading and you're finding it very choppy, it is. It's not your imagination. It is choppy because it's in an area where the weekly wants to turn around and go up, and the daily, and it could go either way. So caution here. I would identify this range and then look for it to break out to the upside, which immediately my brain says, okay, the weekly is going higher, and then I can trade in line with that. Or if it breaks below the low. So it's sitting at a fork in the road, which way is it going to go? So when we look at, I want to remove all these objects, but it's fine. I'll do it later. When we look at other charts, we can see here, for example, what's sterling looking like? Sterling's trending. It's actually a better quality trend, and it's back in this area. It's back in this area. So, and it's off these old highs. So it's the same thing. So euro dollar and GBP dollar look that way. Why? Well, because it's the dollar. The US dollar is a bit of an area. What's the difference between Aussie And I'm going to go back to the Aussie yen and Kiwi yen now. Aussie's much weaker. There's no trend here like we just saw with the euro and the pound. We look at Kiwi dollar. I didn't bring Kiwi dollar in. My apologies. It's got to be here. There we go. So we look at Kiwi dollar. We also get a lot of weakness. It's almost breaking below the low here. So Kiwi and Aussie are weaker. That's why Kiwi yen and Aussie yen were not trending, because they're a lot weaker. What's dollar? Let's have a look at a few of the others here. Where's my other one that I wanted to have a look at? Okay, so I'm cautious on those pairs. When we look at dollar yen and all the yen pairs, okay, so very quickly let's run through the euro pairs. Are they nice and bullish? Yes, euro Aussie, boom. Why is that? Because Aussie's weak, euro's not doing too badly. So euro Aussie watch list for trends. I'm looking for it to go higher, day trading and pullbacks. What about euro? Yes, looking for pullbacks. It's becoming a little bit overextended away from the moving averages. I want that. Thank you very much. I see the soft reminder. Just want to go through these. So I like these pairs. Let's look at pound Aussie. Very nice, nice and bullish. It's just pulled back, it's just heading off. Okay, pound Kiwi is going to be the same. So these are really, really nice, strong trends. Let's quickly have a look at Sing Yen. Sing Yen is also looking good. It's got a bit of a resistance level, but once it breaks through this, there could be some good trends to the upside there as well. Let's look at Kiwi Sing. Kiwi Sing, nice and bearish, nice and bearish. Why? We know this instantly because we know that Kiwi's weak. So for me, the pairs that are the safest for me to approach will be the ones that are either very strong or very weak. And we Aussie and Kiwi pairs are looking like that. Let's have a look at, say, Swissy Sing. Swissy Sing is bullish, trending higher. I like it, even though I'm looking at. So is there something that I'd avoid? Well, look at that. I mean, here we've got Aussie Swissy pushing lows. We've got a few of these ones here as well. What about Euro Sing? Euro Sing is struggling a bit because both the Singapore dollar's doing relatively well and the euro is also quite strong. So there's some issues there. What about a couple of the others? Okay. And very quickly, let's have a look at gold, because again, I'm conscious of the time and I'm sorry, guys, there's so much I want to kind of talk about and also combine with the market. So let's have a look at gold. What is the status of gold? Okay, let's look at the bigger picture. Bigger picture for gold, where it is, right? It's generally trending higher. It's battling with this level. And you can see a week down, week up, week down. So it's a little bit range bound where it is now. Let's go to the weekly. It's a little bit choppy. It's got wicks up there. So that is a level it's battling with. You can see it. What about this area? Well, that's the area we need to watch now. We've got a little bit of an area here. We've kind of closed below that. And then we go a little bit lower. One more thing. There we go. Okay, so we could see gold go a little bit lower this week, down into these areas, but it's dangerous because also the bigger trend is to the upside. So we could find that it turns around and goes around. So it's tricky. What I would say is that once it starts to look bullish, once I see it start to trend, here it's a downtrend on the daily, I think that once it starts to break to the upside, once it starts kind of breaking through these areas and trending higher, I think it's going to become quite bullish because I think that the longer term momentum is to push to the upside. So the big question that came through now, great one. Do I use currency strength, for example, in another app or a website to scroll through the charts? I do it by, you can use those. You absolutely can. You can get free MT4 indicators, which will show the currency strength weakness things. But I like to do it by eye. And it's a fantastic exercise because you're doing analysis again. Learn to trust the markets are kind of communicating to you. If it's not clear to you, then it's probably not clear. Like if you can't really see which way the market's going, it's not you. Like go and look and find something that is definitely going somewhere. So for example, what is trending somewhere? And in the example I used earlier, I was using Swissy yen. This has got a strong, really strong. So that's what a good trend looks like. But if it was looking like this, there's a problem. Okay, quickly, we were looking at gold. I want to look at crude oils because crude oils are sitting on my watch list, and I want to look at the indices, the US indices. So what's going on with the US indices on the weekly? Bit of a weekly retracement, but they are bullish. They are trending higher. Forget about the media here. The media is always negative about the markets. It's never optimistic. And when it is, you should be panicking. So it's never optimistic. Through all these highs over here, we are trending higher. The monthly is coming up to the all-time highs here. The daily looks a bit choppy. And the reason why ladies and gentlemen, and this is the 6 candle point that I wanted to teach you. Look at 5 or 6 candles here. When it looks like this, when you see 6 candles that are side by side by side by side, they are not tradable for day trading. So if you go down to the 1 hour, it's a mess. You cannot trade this and make money because it'll kick you in, it'll take you in, take your lunch money and kick you out. You can't do that. So it's called the 6 candle theory because you want to look at about 6 candles. If they're going side by side, it's not worth going even below that and looking for opportunities. Unless you range trade and you like to do that, but if you're trend trading on the lower time frames, you're not going to do it. And if, on the other hand, if you look at 6 candles or the last 3 or 4 candles and they're going like marching soldiers up or marching soldiers down, then immediately you know that there are potential money-making opportunities on the lower time frames because that market's moving. So let's look at the S&P 500. Same thing again. It's pulling back into the moving averages. The trend is coming back into the station. We've got a level over here. I think we could do a deeper retracement, but the markets are looking good. Doesn't matter what the media is saying. This is the actual transactions going through into the markets, people actually placing orders, what's physically happening in the market, and the market looks good. We've got the tech stocks very much overextended in my opinion. I would really like to see a deeper retracement, but we may not get that. It might just do a minimal retracement and then come back. So I do think that these markets are on the edge of a correction and not an edge of a change. It's innocent until proven guilty. So you always assume we're in a bull market now. We were in a bear market here. We turned around. We took 3 to 4 months to 6 months to get into a bull market. We've just got into a bull market. It's unlikely. It's not impossible, but it's highly unlikely we're going to go back into. So this is more likely to be a temporary retracement within the bull market. Hopefully everything I'm saying to you makes sense. Let's look at the FTSE. FTSE is not as bullish, so I wouldn't trade the FTSE. It's not as crystal clean. Let's look at the Hang Seng. Hang Seng is going through something right now. It's not as bullish. So I would either be bearish on it cautiously or not involved at all. The DAX is in a very weird place, but it's all-time highs. So let's just keep that in mind. It's at all-time highs. Okay, so that's not great. And let's look at the Aussie one, for example, also very messy. So what does that tell me? It tells me, well, if the US markets, which are the biggest in the world, are looking at a bit of a correction, the markets could be choppy just for a couple of weeks. Means either don't trade them at all or very cautiously trade them. Stay away from them until they become bullish again. We are in a bull market. Gold, it was just crude oil that I wanted to show you. I realize I've run over. Sorry, guys. Let's look at commodities. Let's look at these. Let's look at US crude oil, and then we're done. Okay. So we're downtrend, sideways, pushing up now. You can see the change angle of price. So we just got to get through this level, and then I'm looking for price to potentially start to pull back, and on the daily as well. So I just want to see us, but it is looking somewhat bullish. It's a little bit overextended on the weekly, but it's also above the 50-period moving average. So it's more bullish than bearish. So basically, I'm looking for any kind of pullback there, ideally looking for them to continue up, and that looks good. And Brent is the same. Brent is also looking good. It's also sitting at a major level, and major levels are dangerous just because the market, until it really gets free and clear of that level, it can just get choppy. It sits around that level. So there, gentlemen, I am going to leave you with that. I'm going to recap here. The yen pairs look good to me. I like the Aussie crosses. The Kiwi crosses are nice and weak. Where they look particularly nice, healthy trends. Those are the ones I'm going to focus on. I'm going to be looking for those opportunities. Crude oil in principle looks like it's got potential. Gold is in a bit of a tricky area. Silver's looking potentially weaker than that. And the US indices look like they're having a bit of a correction, and non-US indices just look really choppy. So what I hope you got away from this was why that's how I've reached that opinion, and why I might drop down on my watch list. Keep an eye on them. If they suddenly start moving, that's fine, but I don't have to obsess about them. And that is it for me. So I'm going to stop sharing. Thank you very much. And good. Thank you. And I'm sorry I ran over, but I hope it was worth it for you. So, and that's obviously my goal here, is to make sure that I brain dump as much as I can. And I'm going to leave you with that. Listen, I want to wish you a wonderful. Thank you so much for your time. I very much appreciate it. And I look forward to seeing you the next time that I do this. And again, also don't be shy. If you have questions, bring a question, put it aside. And when I'm speaking, I'm always happy to answer your questions as much as possible, guys. And again, make sure that you get actively engaged with your mentors or any of the programs you're doing. Make sure that you do that. Log your trades. It's really important. Your goal is to find out, is it me or every trade you take, winner or loser? Did I miss something? How did it go? Was it market conditions? It's a numbers game, guys. Thank you very much, and have a fantastic week. Thank you.